Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 29th of December 2017, and 2017 is in the books. It was a good one. The S&P 500 gained close to 20%. If you include dividends, it was greater than that. The Nasdaq 31%, led by those semis, which were up 36%. Just really impressive all around, and I'm making zero predictions for next year. In fact, I'm not going to do a long wrap up of the year end. I'll leave that for other people. Instead, I'm going to continue to focus on the action in front of me and look for my particular swing trade time frame. That's the time frame that I choose to engage the market. On the overall market, we're of course still in a major uptrend. We're above the 20, 50, 100, 150, 200-day moving average. Intermediate term, we're slowing down a little bit. The volume weighted average price off of the gap a couple weeks ago has kind of been having some back and forth support and resistance, as we've actually been more in a band of trading, basically between 267 and up here about 268 and a half. So we give the benefit of the doubt to the buyers overall. We're seeing a slight correction through time. If we break down from here, the next level of potential support is this little volume weighted average price off of this peak. And as I mentioned a couple weeks ago, we had broken this uptrend line, but breaking an uptrend does not mean a reversal. It simply means the rate of ascent has slowed and perhaps we need more of a time correction, but we do run the possibility of a deeper price correction as well. Going into the new year, we are still in a major uptrend. There is nothing here saying that the market has topped out. As I've said, we'll know the top well after the fact, and our focus at Alpha Trends is going to continue to be a swing trade time frame. That is, we look for the low risk, high probability setups in the direction of the trend, and we move to the sidelines. Think about what you can do for next year. Basic things. Just do more of what worked for you this year and less of what didn't. What works? Money management, risk management is job number one always. Forget the headlines about who's the president, about elections and all that sort of thing. Look at the price action, and it is still quite steadfastly bullish. Now, the Nasdaq is lost a little bit of ground this week. We can see that that was the wrong chart. So let me just close that out. But we lost a little bit of ground this week. However, we're still above a rising 50, 100, 150, and 200 day. If that looks confusing, it says 25. This is 25 periods. Each candle here represents 2 days. It just makes it easier to see the action overall. But for the year, of course, major uptrend. We're still, maybe we come down to that trend line. That would be, a decent correction from here, but still would not violate the major uptrend that we're in. So quit worrying about whether we've made a top, as so many people seem to focus on. Instead, take it in bite-sized chunks that are more easily digested. Now, today we saw that the volume weighted average price off of this December low was broken, and we are below that declining 5-day moving average. I've been a little bit cautious all this week. We were looking for this prior resistance to hold as support, but we've got stuck underneath that declining 5-day moving average and lost some ground. So heading into the new year, we're a little bit cautious on the intermediate term time frame. However, again, the longer term time frame, major uptrend. So far, there's nothing here that I can see that would give us reason for concern. We've got this trend line off of this late September low. That's likely to be hit down near 155 next week, so keep an eye on that. If that fails, then perhaps we settle down towards that 50-day moving average. But again, the primary trend is still higher. The Russell 2000 today broke beyond a little bit of resistance, but in keeping with don't chase the gap, it should not have been purchased as it broke above that prior little band of resistance. Instead, it sold off right away and stayed below the volume weighted average price almost the entire session. So if we take a look at today's action, you can see that we were below that volume weighted average price for almost the entire session, except for maybe about 15 minutes. But the direction of that volume weighted average price was lower, which told us don't go in and buy the Russell 2000. So we broke a little bit of near term support. That puts puts us a little bit cautious. We are below a declining 5-day moving average as well. And looking at the daily time frame, we still have a strong position here. That is, the buyers are in control still. We can draw a trend line that looks like this off of this low, and you can see that we kind of hit on that today. So that's going to be important. More important probably is the volume weighted average price from that level down near about 151.75. And these are the levels I focus on every single day at alphatrends.net. If you've thought about subscribing to Alpha Trends and you want a clear approach to trading the market in 2018, keep your eyes open for a sale that I do each January. That'll be coming up in the next week or so. Semiconductors lost some ground here. They really kind of gave it up when they lost this level here and made that little washout here. So on the daily time frame, we're below a 50-day moving average. And that 50-day moving average is flattening out, which tells us that this is the most serious correction we've seen pretty much all year for the semiconductors. We've spent more time below that 50-day moving average than we have at any other time in actually the last couple of years. If we back this up just a little bit, we can see that red 10-week moving average is equal to the 50-day, of course, and it looks like we're heading for another test of the 20-week or the 100-day moving average. That currently comes in pretty much next to the lows that we saw in December. So it's looking like we need to be a little bit cautious in regards to these semiconductors. Looking at the volume weighted average price off of this peak, we're stuck below that. We're stuck below this 5-day moving average. This past week, the buyers tried to regain control after this gap lower, but you can see we're stuck below the volume weighted average price from that gap as well. So going into next week, if we see a rally up towards 98.50 that then begins to fail, maybe more aggressive traders want to take some short position. But again, it is within the context of a much bigger bull market, so just be aware of your position sizing more than anything. Biotechs, this group really looked like it had the position, the ability to be a big winner this year, but after it broke out, it lost some volume weighted average price levels that we've been speaking about, and it came down and tested the breakout level, but it's really having a difficult time in here. Let's go down to the daily time frame, and you can still see we have this declining 50-day moving average. As I've been telling subscribers, don't expect this strength in here to hold because the 50-day moving average is declining, and that's what we're seeing, is that it is beginning to fail once again. So now with these biotechs, breaking, for instance, this trend or holding this trend line, but I think that more importantly that we'll probably see something that looks like maybe a slight undercut of 106, then rally up, and then maybe continue a little bit lower down towards that 50-day moving average. So heading into the next year, again, I don't have any grand predictions. I'll leave that to people who predict. I'm going to continue to focus for myself and subscribers at Alpha Trends on the low risk, high probability swing trades. I hope it was a great year for you. There was plenty of opportunity. There was a lot to learn from, and that's what your focus should be, is to learn from your winners as well as your mistakes. I'm going to do a webinar here in about a week or so as well. Keep your eye out for that. I did this a couple years ago, and that is learning from the losers of 2017. What can we learn from some of the bigger losers? And I have about 10 different themes I'm going to talk about there, and how you can protect yourself going into next year. A lot of people are calling that maybe this is going to be the end of the market. It can't sustain itself any further. They've been saying that for a while as well, but we clearly need to have risk management skills, and that's what the purpose of that webinar will be. Thanks for tuning in, and I hope 2017 was a great year and 18 is even better.